becoming less of a headwind for you as you proceed through the year?
Thanks, CJ, for the question. I'll start on the data center supply. As we discussed last quarter and discussed today, we still have some supply constraints across some of our businesses. Networking in the data center business has been supply constrained. We're improving every single day, and we do expect to improve supply each quarter as we enter into fiscal year 23 here. So that is probably the key area within our data center, but from time to time there can be other types of focus in data center. So I'll turn the rest of the question to Jensen in terms of how about the rest of the year as well.
Yeah, Colette captured it well. We are supply constrained. Our demand is greater than our supply. As you know, our data center product line consists of GPUs, NICs, Bluefield DPUs, quantum and spectrum switches, HGX, if you will, system component, meaning that the entire motherboard or the entire GPU board is delivered in combination because it's so complicated. And so we have products that span a broad reach of use cases for data centers, from training of AI models to inferencing at very large scale, to universal GPUs for public cloud, industry standard servers, commodity servers for enterprise use, and supercomputing systems that use InfiniBand and quantum switches. And so the application space is quite broad. We saw demand constraint pretty much across the entire range. Our operations team did a fantastic job this year, both in executing in all of these complicated products, but also in expanding our supply base. We expect supply to improve each and every quarter going forward. And this coming quarter, the Q1, the April quarter is based on guidance that Colette just made, is consistent with an increasing supply base. We expect to still be demand constrained, but our supply base is going to increase this quarter, this next quarter, and pretty substantially in the second half.
Next, we'll go to Joe Moore with Morgan Stanley.
Great, thank you. I wonder if you could talk a little bit more about Grace now that the strategy kind of separated from the acquisition of ARM. What are your aspirations there? Is it going to be primarily oriented to the DGX and EGX systems business versus merchant chips? Just how are you thinking about that opportunity long term?
Yeah, thanks, Joe. We have multiple ARM projects going in the company, from connected from devices to robotics processors, such as the new Orin that's going into autonomous vehicles and robotic systems and industrial automation robotics and such. Orin is doing incredibly well. It started production, and as we mentioned earlier, it's going to drive an inflection point starting in Q2, but accelerating through Q3 and the several years after as we ramp into all of the electric cars and all of the robotic applications and robo-taxis and such. We also have ARM projects with the CPU that you mentioned, Grace. We have Grace, and we surely have the follow-ons to Grace, and you could expect us to do a lot of CPU developments around the ARM architecture. One of the things that's really developed nicely over the last couple of years is the success that ARM has seen in hyperscalers and data centers. And it's really accelerated and motivated them to accelerate the development of higher end CPUs. And so you're going to see a lot of exciting CPUs coming from us, and Grace is just the first example. You're going to see a whole bunch of them beyond that. But our strategy is accelerated computing. That's ultimately what we do for a living. We as you know, love it where there's any CPUs. If it's an x86 from any vendor, so long as we have a CPU, we could connect NVIDIA's platform to it and accelerate it for artificial intelligence or computer graphics, or robotics and such. And so we love to see the expansion of CPU footprints, and we're just thrilled that ARM is now growing into robotics and autonomous vehicles and cloud computing and supercomputing and all these different applications. And we intend to bring the full spectrum of NVIDIA's accelerated computing platform to NVIDIA ARM CPUs.
Next, we'll go to John Pitzer with Credit Suisse.
Yeah, good afternoon, guys. Thanks for letting me ask the question. Colette and Jensen, just on the inventory purchase obligations, I think this was the fourth quarter in a row where you've seen greater than 30% sequential growth, and it's the first quarter where that number is now eclipsing kind of your quarterly revenue guide. And so I guess I'm trying to figure out, to what extent is this things are across the semi industry? To what extent is this a poker tell of kind of how bullish you are on future demand? And relative to your commentary that supply starts to get better throughout the year, should we expect that number to start to level off, or as the mix moves more to data center, more to longer cycle times, more complicated devices, should that number continue to grow?
The factors, the drivers that you mentioned in the supply chain, we expanded our supply chain footprint significantly this year to prepare us for both increased supply base and supply availability in each one of the quarters going forward, but also in preparation for some really exciting product launches. As mentioned, Orin ramping into autonomous vehicles is brand new. This is the inflection point of us growing into autonomous vehicles. This is going to be a very large business for us going forward. It was already mentioned, Grace is a brand new product that has never been on NVIDIA's roadmap, and we already see great success with customers who love the architecture of it and desperately in need of the type of capability that Grace brings. And this should be a pretty exciting year for new product launches. And so we're preparing for all of that, laying the foundation for us to bring all those exciting products to the marketplace.
Next, we'll go to Tim Arcuri with UBS.
Thank you very much. Obviously, there's a lot more talk from you about software, and I think it's still kind of a little bit of a black box for a lot of investors. And I know, Jensen, that you've talked about software as a medium to basically open up new markets. But I'm wondering maybe if you can sort of quantify how big the software licensing revenue is today, and maybe when you might start to break it out like you did data center, which really got the stock moving in a huge way. Thanks.
Yeah, NVIDIA is a software-driven business. Accelerated computing is a software-driven business. It starts from recognizing what domain of applications we want to accelerate and can accelerate, and then building an entire stack from the processor to the system software, the acceleration engines, and potentially even the applications itself, like the software that we were mentioning earlier, NVIDIA Drive, NVIDIA AI, and NVIDIA Omniverse. These are applications that sit on top of system software and are really valuable to the marketplace. The way to think about our software licensing, so we've always been a software-driven business, but for the very first time, we have packaged licensable software available to customers. The way that we license software for NVIDIA AI Enterprise is per node of server. There's some 25 million servers that are installed in the world today. in enterprises, not including clouds. We believe that every single server in the future will be running AI software. And we would like to offer an engine that enables enterprises to be able to use the most advanced, the most trusted, the most utilized AI engine in the world. And so that is essentially the target market, if you will, for NVIDIA AI. The NVIDIA Omniverse is targeting, is designed for creators contributing content to a virtual world and connected to robots that are contributing to content in a virtual world. And so it's based on connections. There are 40 million designers and creators around the world. There are going to be hundreds of millions of robots. Every single car will essentially be a robot someday. And those are connections that will be connected into a digital twin system like Omniverse. And those are, so the Omniverse business model is per connection per year. And in the case of NVIDIA Drive, we share the economics of the software that we deliver. And if it's AV software or parking software or cabin-based AI software, whatever the licensing is or whatever the service, if it's an upfront license, we share the economics of that. If it's a monthly service subscription, we share the economics of that. But basically, for the cars that we are part of, that we're developing, the end-to-end service, we will get the benefits of the economics of that for the entire life of the fleet of the car. And so you could imagine what 10 million cars with modern car lifetimes of 10 to 20 years, the economics and the market, the installed opportunity is quite high. And so our business opportunity is based on those factors. But our software business really started several years ago with virtual GPUs, but this year was when we really stepped it up and offered for the very first time NVIDIA AI Enterprise, Omniverse, and Drive. And so watch this spot. I think this is going to be a very significant business opportunity for us, and we look forward to reporting on it.
Next, we'll go to Vivek Arya with Bank of America.
Thanks for taking my question. Jensen, in the past, you mentioned about a 10% or so adoption rate for AI among your customer base. I was hoping you would quantify where we are in that adoption curve, if you could kind of differentiate between the adoption differences between your hyperscale and enterprise customers. And then kind of related to that, is there an inorganic element to your growth now that you have over $20 billion of cash on the balance sheet? How are you planning to deploy that to kind of accelerate your growth also?
Yeah. The applications for AI is unquestionably growing, and it's growing incredibly fast. Whether in enterprises and financial services, it could be fraud detection. In cases of consumer pointing businesses, customer service, conversational AI, what people are calling chatbots. But in the future, every website will have a chatbot. Every phone number will have a chatbot that whether it's a human in the loop or not human in the loop, will have a chatbot. And so customer service will be heavily supported by artificial intelligence in the future. Almost every point of sales, I think, whether it's a fast foods or quick service, businesses are going to have chatbots and AI-based customer service. Retail checkouts will be supported by AI agents. And so all of this is made possible by a couple of breakthroughs. Computer vision, of course, because the agents, the AIs have to make eye contact and recognize your posture and such, recognize speech, understand the context and what is being spoken about, and have a reasonable conversation with people so that you could provide good customer service. The ability to have human in the loop is one of the great things about an AI, much more so than a recording, which obviously is not intelligent, and therefore it's difficult to, if you will, call your manager or call somebody to provide services that the AI can't. And so the number of different applications that have been enabled by natural language understanding in customer service in just the last couple of years has grown tremendously. I think we remain early days in our in AI adoption. It's incredible how fast it's grown and how many different applications are now possible with AI. It pretty much says that almost all future software will be written with AI or by AI, and when it's done, it will be an AI. And we see it in all these different industries. And so I'm pretty certain we're in the early innings yet of AI, and this is going to be one of the largest industries of software that we have ever known. With respect to capital, we had, as you know, we had just terminated our ARM agreement. We have a regular capital strategy process, and we'll go through that, and we'll make the best judgment about how to use our capital in helping our growth and sustaining our growth and accelerating our growth, and we'll have all of those sensible conversations during those capital allocation meetings. We're just delighted to have so much capital, and so just to put it out there.
And next we'll go to Aaron Rakers with Wells Fargo.
Thanks, guys. This is Michael on behalf of Aaron. Can you guys talk about how the launch of the RTX 3050 is going so far, and maybe more broadly, your view of where we are in the Ampere product cycle on gaming? Thanks.
Yeah, thanks, Michael. Let's see. RTX is a unqualified home run. RTX completely reinvented modern computer graphics. It brought forward ray tracing about a decade earlier than anybody thought possible. The combination of RTX with artificial intelligence, which enabled this technology we call DLSS, is able to not only do a ton more computation using our shader processors, but also engage the powerful tensor core processors that we have in our GPUs to generate images, beautiful images. RTX is being adopted by just about every game developer on the planet now. It's being adopted by just about every design tool on the planet now. And if not for RTX, Omniverse wouldn't be possible. We wouldn't be able to do physically based path tracing and simulate sensors like radars and lidars and ultrasonics and of course cameras, and simulate these cameras physically and still be able to deliver the type of performance that we deliver. And so RTX was a game changer for the industry. It reset modern computer graphics, and it was an enabler for us to build an entire new platform called Omniverse. We're about I think about a third of the way through upgrading an install base that is growing. You know that video games is now the world's largest gaming genre, and Steam over the last 2 years has grown by 50%. The number of concurrent players on Steam has grown tremendously. In just the last couple of years, a brand new game store from Epic came on, and it's already a multi-$100 million business. I think it's close to $1 billion. They're doing incredibly well. I'm so happy to see it. And so the overall gaming market is growing, and it's growing quite nicely. But the thing that in addition to resetting computer graphics for our entire install base, the growing of our install base, because gaming is growing, There are a couple of other growth dynamics that are associated with GeForce and RTX that's really quite brand new. One of them is hybrid work. This is a permanent condition, and we now are seeing across the board people who are designers and creators now have to set up essentially a new workstation or new home workstation design studio so that they could do their work at home. In addition, the creative economy, the digital economy, the creative economy is really doing fantastically because everything has to be done in 3D now. Print ads are done in 3D. So 2D print is done in 3D. Video is done in 3D. And live video, broadcast video, the millions of influencers now augment their broadcast with rich augmented reality and 3D graphics. And so 3D graphics is now not just for video games and 3D content, it's actually used now for all forms of digital content creation. And so RTX has all of these different drivers working behind it, and we're definitely in the early innings of RTX.
Next, we'll go to Stacey Rasgon with Bernstein Research.
Hi, guys. Thanks for taking my question. So you said that the growth in the next quarter, it's about $450 million, give or take, driven by data center. Can you give us some feeling for how that growth is being driven by units versus pricing versus mix, and how those drivers might differ between gaming and data center, if at all, for Colette?
It's really early in the quarter to determine, Stacey, our exact mix that we will have based on a unit and an ASP across the board. Our overall growth quarter over quarter going into Q1 will be driven by data center primarily. We will see a little bit of growth there in gaming. I think that's important to understand that even after Q4 and holiday, moving into Q1, we'll still probably see growth here in gaming, which is different in terms of what we've seen seasonally. And we'll probably have growth in automotive as well, sequentially between Q4 and Q1. There are still some areas that are supply constrained. We are working, again, to try and improve that for every quarter going forward. But that's how you should look at our guidance for Q1, primarily from data center.
Next, we'll go to Harlan Sur with JP Morgan.
Good afternoon. Congratulations on the solid results and execution. You know, the networking connectivity portfolio addition has been a pretty solid for the NVIDIA team, especially in enabling scaling of your GPU systems, improving connectivity bottlenecks in yours and your customers' accelerated compute platforms. So in a year where cloud spending is growing 30%, you've got a strong networking upgrade cycle, which is good for your NIC products, and just continued overall good attach rates. If the team can unlock more supply, will the networking connectivity business grow in line or faster than the overall data center business this year? And then for Jensen, have you driven synergies between Mellanox's leadership in networking connectivity and, you know, for example, leveraging their capabilities for your internally developed NVLink connectivity and switching architectures?
Yes, absolutely. If not for the work that we did so closely with Mellanox, the scalability of DGX and DGX SuperPod and the research supercomputer that was just installed at Meta would just not be possible. The concepts of overlapping networking and compute, moving computing into the fabric, into the network, the work that we're doing with synchronous and precision timing so that we could create Omniverse computers that obey the laws of physics and space-time, these things are just simply not possible. The work that we're doing to bring cloud-native secure multi-tenancy to supercomputing wouldn't have been possible. the number of innovations that are countless. I am so thrilled with the combination and so thrilled with the work that the Mellanox team are doing. We've accelerated roadmaps as a result of the combination that we could leverage a much larger base of chip design. Bluefield's roadmap has been accelerated probably by about a year. The switch and the quantum switch and the spectrum switch, the SerDes are absolutely world-class, shared between Ethernet and InfiniBand and NVLink. Absolutely the best SerDes in the world. So the list of opportunities or the list of combination benefits is really quite countless. So I'm super thrilled with that. With respect to networking growth, we should be growing. If we weren't supply constrained, we should be growing faster than overall CSP growth. And the reason for that is twofold. The first is because the networking leadership position of Mellanox is highly heavyweight in the upper end of networking, where the adoption of higher speed networks tends to move. And so it's sensible that as new data centers are built, the first preference is to install it with higher speed networking than last generation networking. And Mellanox's networking technology is unambiguously world class. The second reason is because the areas where the overall NVIDIA is strong has to do with the areas that are growing quite fast, related to artificial intelligence or cloud AI and such. And so those different applications are growing faster than the core. And so it would be sensible that we have the opportunity as we expand our supply base to continue to grow faster than CSPs overall.
Our next question will come from Matt Ramsay with Cowen.
Yes, thank you very much. Good afternoon. Jensen, I maybe wanted to expand on some of the things that you were just speaking about in your last answer with respect to the data center business. It's not often, maybe if ever, that you have both x86 server vendors having new big platform upgrades in the same year, which will probably happen later this year. There's a lot going on there, DDR5s, PCIe 5, some CXL stuff. I wonder if you could talk a bit about your data center business broadly and what you feel might be memory and I/O constrained currently that these systems might unlock for you, both in the cloud and enterprise side, but also in the DGX business. Thanks.
Yeah, thanks, Matt. There are several bottlenecks, and let me just highlight some of them. One of the largest bottlenecks is memory speed, and memory speed. That's the reason why we use the fastest memories in the world, HBM and GDDR, et cetera, et cetera. We are the largest consumers of the fastest memories in the world, and not even by there's not with no close second that I know. And so our consumption of fast memories is important to the work that we do. The second is networking performance. It is the reason why we have the fastest networks. It is also the reason why we have the most fastest networks in any system. We will have, for example, 8 InfiniBand of the highest speeds connected right into a HGX or DGX server. And so the work that we do in GPU direct memory, RDMA, the work that we do with GPU direct storage, the work that we do with in-network computing and all reductions and moving data around inside a network is absolutely world class. This is an area that we are I am just incredibly proud. All of that is so that we could be less bottlenecked by the CPU. Remember, inside our our DGX system is 1 CPU and 8 GPUs. And the fundamental goal is to offload as much as we can and utilize the resources that we have as much as we can. This year, we expect a transition in PCIe Gen 4 to Gen 5. We are constrained on Gen 4. We'll be constrained on Gen 5, but we're used to that, and that's something that we're very good at. And we'll continue to support Gen 4 well through next year, maybe well through the next couple of years, and all of the installed base of Gen 4 systems that are going to be all over the world. And we'll take advantage of Gen 5 as much as we can. But we have all kinds of new technologies and strategies to improve the throughput of systems and avert the bottlenecks that are there.
Our final question comes from the line of Raji Gill with Needham & Company.
Yes, thanks, and congrats on the good quarter and guide. Colette, question on the gross margin and to Jensen's point about really creating a software business driven by Omniverse, Drive, and Enterprise. When you're kind of contemplating, your margin profile over the next couple of years, how do we think about that? Is it really going to be driven by an increasing mix of software as a percentage of your revenue over time? Is there more margin, upside on the hardware side in terms of some of your segments? The software opportunity is very exciting, but I'm just curious how that would translate to your kind of more of a longer-term margin profile. Thank you.
Yes, thanks for the question on gross margin and the long term. When we think about the long term of gross margin, we have incorporated software in many of our platforms even today, meaning our high-value platforms in data center, ProViz, other parts of our business have really helped us with our gross margin to this point, and we've done a really solid job of managing that and the growth over the years. But I believe these businesses will continue to be a growing opportunity for us, but now also with the ability to package up software and sell it separately. So as that scales with our enterprise customers in the data center and with our already procured deals, automotive, we've got a great opportunity in the future and be important margin for the years to come. So we're going to work on that. We've set the stage for having been able to package it up, to be able to sell it separately, to create the business models, to create the partners that are helping us sell it. But yes, we do believe this will be a driver in the long term.
Thank you. I'll now turn it back over to Jensen Huang for closing remarks.
Thanks, everyone. The tremendous demand for our computing platforms, NVIDIA RTX, NVIDIA HPC, and NVIDIA AI, drove a great quarter, capping a record year. Our work propels advances in AI, digital biology, climate sciences, gaming, creative design to autonomous vehicles and robotics. It's some of today's most impactful fields. Our open computing platform, optimized across the full stack, architected for data center scale, is adopted by customers globally, from cloud to core to edge and robotics. I am proud of NVIDIA operations team as we made substantial strides in broadening our supply base to scale our company and better serve customer demand. And this year, we introduced new software business models with NVIDIA AI Enterprise, NVIDIA Omniverse, and NVIDIA Drive. NVIDIA Drive is a full-stack end-to-end platform that serves the industry with AV chips, data center infrastructure for AI and simulation, mapping, and the autonomous driving application service. Our data center infrastructure is used by just about anybody building AVs, robotics, robotaxis, shuttles, and trucks. EV companies have selected our Orin chip across the world, and our partnership with Mercedes-Benz and Jaguar Land Rover has opened up a new software and services business model for millions of cars for the life of the fleet. Nvidia Omniverse is a world simulation engine that connects simulated digital worlds to the physical world. Omniverse is a digital twin, a simulation of the physical world. The system can be a building, a factory, a warehouse, a car, a fleet of cars, a robotic factory orchestrating a fleet of robots building cars that are themselves robotic. Today's internet is 2D and AI is in the cloud. The next phase of internet will be 3D and AI will be connected to the physical world. We created Omniverse to enable the next wave of AI, where AI and robotics touches our world. Omniverse can sound like science fiction, but there are real-world use cases today. Hundreds of companies are evaluating Omniverse. We can't wait to share more of our progress at next month's GTC. Learn about new chips, new computing platforms, new AI and robotic breakthroughs, and the new frontiers of Omniverse. Hear from the technologists of Deloitte, Epic Games, Mercedes-Benz, Microsoft, Pfizer, Sony, Visa, Walt Disney, Zoom, and more. This GTC promises to be our most exciting developers conference ever. We had quite a year, yet nothing makes me more proud than the incredible people who have made NVIDIA one of the best companies to work for and the company where they do their life's work. We look forward to updating you on our progress next quarter. Thank you.
This concludes today's conference call. You may now disconnect.